Hey there. Welcome to People Count, a DiversIQ podcast where we talk about workforce, diversity, and human capital management from a data lens. DiversIQ is the leading provider of human capital and DEI data for the largest publicly traded companies in the world. We provide the most comprehensive data set focused on DEI, human capital, and other social factors affecting the materiality of company culture, employee retention, and inclusion. I'm Dan Berlingeri, and today I am joined by Max Dulberger, Director of Corporate Governance and Engagement at Segal Marco Advisors. How's it going, Max? How are you today?
I'm great. It's great to be here, Dan.
Yeah, good to have you. How you doing on a Friday? How you feeling? How's your week been?
Things are good. It's been busy times, in our space. A lot of companies' annual shareholder meetings and such happen this week. So lots to digest, lots to process. But yeah, things are good.
Awesome, awesome. For our listeners who don't know you, who might be few at this point, you seem to know quite a bit of people in our space. Would you give us a little background on you, your experience?
Yeah, for sure. So yeah, I've been in this space for about 9 years now. Prior to being at Segal Marco Advisors, I've been with Segal Marco for about a year and a half. But prior, I was at the Illinois State Treasurer's Office, where I essentially led and helped develop the ESG investment program for the office. And that was a very educational and meaningful experience as the office did not really have any kind of ESG investment program at the time. There was
Wow.
not a focus on proxy voting. There weren't corporate engagement activities on material ESG risks facing companies in our portfolio. We weren't a member of various different groups and initiatives that help investors do this work. So it was really kind of going from 0 to 100 and trying to onboard best practices for investment stewardship to enhance the investment objectives of the office. And so I was there for 8 years. And then, about a year and a half ago, moved over to Segal Marco Advisors, which is an investment consultant. And we have a corporate governance and proxy voting practice, which I'm a
Mm,
part of, which we work with. We have over like 160 plans that we vote their proxies on their behalf. They basically delegate us with authority to vote their proxies. And then we also do a lot of corporate engagement work with a number of clients, really looking at companies in their portfolio that are facing some kind of material, environmental, social, or governance risk, and trying to then engage those companies in a collaborative spirit
mm.
to find some best practices and some solutions that help those companies be more successful, hopefully, which obviously benefits them and investors. So it's my quick story. Happy to unpack any details as desired.
Love it, love it. Oh, what got you into this work? What brought
Yeah,
you to it?
so my background has really always been in the public sector. My whole career prior to moving to Segal Marco was working for government institutions in Wisconsin and
Mm,
Illinois. And when I had the opportunity to work at the state treasurer's office, I came in with Treasurer Michael Frericks at the time, came in with his administration. And really, we saw that there was a lack of focus on ESG investment risks and opportunities. And a lot of the practices that counterparts and peers had adopted across the country and across the globe were not in place at the Treasury. And so I was really tasked to do that work, which I feel like was a nice natural fit for me, given more of my policy background and such, and also my
right.
communication background. But it was a learning experience, kind of learning on the job about the investment space and the finance space in particular. So I've always had an interest, but I was always more kind of policy oriented, you could say, with my career. But this had the opportunity to kind of merge policy and finance, which has
Mm.
been a very fascinating realm to be in. So that's the quick story, but I'm sure there's twists and turns along the way that, we could get further into.
Yeah, anything for our listeners curious if you had any major surprises through your career in discovering this space, or for better or worse, anything that caught you off guard or that you didn't expect?
Well, it's interesting. Proxy voting, which is a little bit of a niche area, something a lot of folks
Mm,
don't think about or know about. But I think that was very eye-opening to kind of discover at the Illinois State Treasurer's Office that basically we were ceding all our proxy voting rights and authorities to investment managers. which is a normal practice. Basically, folks
Right.
kind of hire managers for various purposes, and oftentimes those managers will vote on the various different proposals that come up at companies' annual meetings. And for me, it was just interesting. I think for the whole office, it was very interesting to see, hey, we have the ability to vote on board elections, to vote on shareholder proposals that deal with a lot of important topics like, executive compensation,
Mhm.
how a company is handling climate risk exposure, how it's managing its workforce, its human capital. And I mean, we really saw that as an eye-opening opportunity for the office to be essentially a more engaged and more
Mm.
responsible institutional investor, delivering, better returns and better investment management to our beneficiaries, to the folks that rely on us. So I would say
Right.
proxy voting has been an eye-opening area. And now obviously I'm very heavily involved in proxy voting. And so I think a lot of people, just normal folks, when I talk to friends and family, if they, own any investments, they'll say, do you get the emails that say you can vote through these annual meetings? Like, pay attention to those because there's some
Right.
very interesting items that come up, very impactful. But I just think a lot of folks don't think about it or don't have the time. But it
Yeah.
really is an interesting area. So that's one that,
Mm.
that comes to mind.
Nice. Nice. Are there any, that's interesting that you kind of hit that like literacy gap when it comes to, people who don't fully know the finance space and the kind of power that they have as a shareholder. Are there any challenges that you're running into from your seat, either on the advising side or just throughout your career more recently that you feel like have been trending in your space from your perspective?
Yeah, I mean, it's a fascinating time to be in this space because I think previously, maybe say 5 years ago and beyond, there was not a lot of widespread mainstream focus on investment stewardship practices like proxy voting and corporate engagement and the integration of ESG factors into investment analysis. But I think it's picked up, as you know, a lot in recent years.
Yeah.
Now there's a lot of attention from policymakers, from academics, various other different kind of stakeholders on this space, which all in all, I think is a very healthy thing for people to be thoughtfully considering what
Sure.
this work is, how it contributes to investment objectives, and ultimately make this better. I will say that with all that increased focus has come some noise and some misinformation and some folks that are maybe hijacking some of this for political purposes and such. And so that obviously
Yeah.
presents a challenge. I still think it's a fascinating challenge. And all in all, I do think this whole debate is going to make this work better and more refined. But you do have to do more education
Mhm.
and maybe some more, I don't know, sharper communications to explain this work. Whereas before there was maybe just a little less, maybe misinformation in the space, essentially. So, like I said,
Yeah.
ultimately, I'm optimistic about this. I don't think this work is going away. I think it's proven its worth to investors and various other groups and such. But there's noise, confusion, and questions in the space, and I'm sure you're familiar as well, Dan, that folks have to deal with. There's been also, you could say, an attack or a lot of criticism on diversity, equity, and inclusion efforts recently, past couple of years in particular. It's heightened, and again, like DiversIQ, I'm sure confronts this. There maybe is more
Yeah.
disinformation, confusion, and certain questions that then have to be, or myths that have to be debunked and such. And so that's a challenge. But I do think it is an interesting challenge, and it's good to have these
Yeah.
conversations.
Yeah, yeah, for sure. I agree. I mean, everyone's been feeling this strain, this pain. I think it's hard to avoid in a space that can oftentimes be highly personal, workers' voice, workers' rights, DEI. I mean, these are all things that aren't just our investments. These are, human lives, right? And the quality of human lives at work that we're examining and investigating, right? So it's a difficult space and it's hard to not for it to not turn into a political conversation, right? I think, what you were saying about, you got me really thinking here. I think some of these challenges you're encountering, I think some of the space around the demand for better quality data, right? There is like a consolidation effect that I feel like we're experiencing because of the strain and friction and the challenge against, call it anti-woke, call it anti-ESG, whatever you want to. There's so much more pressure to clarify data, right? To measure impact, to point to things that are stronger, tangible signals of things like healthy company culture, more, racial inclusivity, right? Culture inclusivity, equitability within a company, to measure things like retention, to measure things like that are very bottom line items that really help the performance of a company. I mean, a, workers are a company's greatest asset, and they're also, in a lot of cases, their most expensive asset. And so I think it sounds like, from my perspective, being someone who's a little adjacent to finance, the work that you're doing, it sounds like, has so much to do with, positioning companies, communicating to companies, and advocating for greater information, more information to advise on, to manage, to have more empowerment of the shareholders themselves, right? To have a say in the governance and the direction of that company itself. Is there anything you feel you are around that you're hoping for in the future to see around shareholder empowerment and advocacy?
Yeah, well, I think your point about data is a big one because if investors and academics and policymakers don't have data to study the effect of retention or turnover, or to study
Yeah.
the effect of workplace demographics, or various other different measures, then there's a disadvantage that everyone is kind of facing. Essentially, investors are facing, academics and practitioners that are studying this. And without the data, you can't understand as effectively the value or the financial impact of these factors. And so I think we investors, we're often calling just for transparency and reporting or disclosure so that we can get more information to be able to study the issue better and be a more informed, better investor. I also think, from kind of an academic point of view, that, yeah, having the data available will allow us to study and understand these issues in a more comprehensive manner. And so I think, there's been a lot of calls for companies to disclose, various things on the human capital front, such as, yeah, turnover rates, the number of workers they have broken down by full-time, part-time, and contingent
Mhm.
labor, workplace demographics, the makeup of workers, the cost of a workforce, and to get standardized, consistent data from companies across, jurisdictions. So then you have comparable data that investors can use to make better decisions, and also that academics and folks who kind of study the space can use to really identify what factors correlate to enhanced financial performance. So I do think regulators obviously have a big role to play in this as well. Folks like the SE in the United States, in terms of identifying what information is important to investors and how can
Mhm.
they help establish some basic rules for disclosure that protect investors. And also, I will say, when companies are putting out information, the old adage of what gets measured gets managed, definitely comes in. Because when
Yeah.
companies are collecting, putting this data out there, it gives them the opportunity to more actively manage this area of their business. And if there are issues or if there are opportunities, capitalize on those opportunities. So that's all
Right.
to say. I think investors have a role. I think pushing for more data. I think regulators have a role. And I think companies, and a lot of them do, see
Mm.
the value of measuring and reporting out on these areas.
Yeah. Yeah. Data is such a difficult conversation when it comes to corporate disclosure, because oftentimes we talk about, present and stale data. Oftentimes the disclosed information, even that, you know, though incomplete, in addition to being incomplete, it is maybe 6 months old, could be a year old by the time it's released, right? So it's really like, on behalf of corporations, it then becomes this admittance of the history of management, right? it becomes this accountability piece of like, this is how we've been managing. This is what we've dealt with. Like, this is our marker of performance, our KPIs and how well we've done. And if we don't look back on that, we can't measure it moving forward. We can't avoid repeating history again, right? For the negative. So yeah, I think that's just interesting. I think the data piece here is really interesting. And I do hope for the future as well that regulations do press forward with ISSB, with, CSDR, whatever it may be, will help increase the standards here in the States. Yeah.
I think, yeah, there's a lot of advantages to it. I don't think a lot of the data requests are overly onerous, right? I think folks also
Yeah.
want to be reasonable and not push companies to have to collect or report data that's going to be, a major burden. I think, when we are thinking about advocating on these topics, I think we're trying to be reasonable and advocate for things that are important to investors and can be collected and disclosed with not a huge cost essentially for companies.
Yeah. One last question for you. Present state, a lot of this data is not normalized. It is piecemeal. What does Siegel Marco do to try to create a more full picture? Are there any ways in which you're working to try to fill in some of these gaps or to go beyond what is available?
Yeah, I do think we, like others, rely on various different data sources and providers and different organizations that kind of aggregate data and can make it
Mm.
more comparable for investors. I mean, that's something that creates efficiencies, essentially. Now, I do think that you often do need folks to analyze that data and kind of look at things astutely, if possible, so that you're not just fully relying on a rating or
Right.
some kind of score or something. I think you want to consider the context, you want to consider peers, you want to see if is contrasting information, you want to see what companies put out in regard to, say, there's a rating on their climate board governance, or a rating relating to the quality of their DEI disclosure, or whatever topic it is. I think you do want to consider the context. You want to consider what the company puts out, consider if there's any other kind of data sources or providers on that. And I think Siegel Marco, I think we can help with that because there's a lot of information and sometimes there is information overload. Folks don't know how to navigate the terrain
Right.
necessarily. And, I think our team's been doing this for a long time, and our proxy voting group's been doing this since 1989. And so
Wow.
I think, yeah, folks kind of develop experience, best practices to create efficiencies for folks looking to do this work. And that's really, what we do. We work with a lot of multi-employer plans, a lot of public
Mm.
plans to help them with this work and create efficiencies, enable them to be better investors, and help them navigate the data terrain and kind of the network of different investor organizations, hopefully in a more efficient way. So yeah, I think those are some few thoughts. You do want to rely. There are some great providers out there, DiversIQ. I mean, on the diversity data. I mean, you guys are, as you know, rising up to provide high quality data for folks. So there's definitely, a reliance on providers, but I think you also do want some folks behind the wheel, you
Yeah.
could say, to help kind of
Yeah.
sort through all this stuff. So yeah, that's what
Yeah.
we try to do.
Love it. Love it. Max, we're reaching towards the end of our time. I'm curious. Sometimes we do this on the podcast. We'll say, have you seen anything interesting or funny or odd this last week, whether in disclosures or in a general meeting or in a proxy proposal, anything that comes to mind?
The thing that captured my attention probably the most, as it did a lot of folks in this space, was Exxon had its annual shareholder
Yeah.
meeting this week, and there's a lot of attention on it, I think for good reason. I don't know if funny or odd would be the adjectives I would use, but it was very interesting to see what is a debate essentially right now among certain corporations that are, you could say, distraught with the asks of various different shareholders and shareholder groups, and are going to the point of being fairly hostile and aggressive, i.e.
Yeah.
launching lawsuits their own
Yeah.
shareholders, even when the shareholders have basically backed off
Back
and said
down.
we won't submit this proposal. But I think for me this week, that was a very interesting inflection point, and I think we're all kind of still figuring out what this means, but for me, that stood out as something that was interesting for our space. And I think, in the end, trying to think how we can all be better off and working together, how, we can invest in companies that are stronger, and how investors, if they do have concerns, they can raise those concerns through established long-standing processes and have companies essentially have a more collaborative spirit. Maybe that's the thing that's an
Right.
interesting takeaway, is that there's a hostility, an adversarial quality that
Right.
I don't know if that is necessarily beneficial for our space. We want to be collaborative. We want to work with companies to put them in the best place possible to be long-term solid performers. And I want to see our space continue to kind of have that spirit, because we, investors and companies have a mutual interest in the long-term success of companies and such. So it's an interesting time to see things get ratcheted up a little bit. I'd be curious for your thoughts as well, Dan. I don't know if we have time, but
No,
that was an
yeah.
experience this week.
Oh wow, yeah, no, for sure. I mean, we've collaborated with Arjuna, we know what's going on there. And you're right, hostile is the word for it. It's frustrating, it's perplexing, and it's not in everyone's best interest. I think that's been baffling. I think this last week, I think anything recently, I think, I've been hearing trends, especially from yesterday's, trial results right around, I think, Trump's trial. I think people in the ESG space specifically, highlighting the theme of, like, your actions do have consequences in this economy. And I think that's something that we're also trying to pioneer in a space of, so, responsible investing, that companies' actions have responsibilities, or their actions have consequences, particularly their hostile ones, right? So I think that's not a threat. It's just something to be considered, right? I think that's why look, I'm not in finance, but I think that's why there is governance for a reason, right? And when their shareholders can't speak loud enough, there are governance mechanisms in place to make sure that, the company's best interests are kept in mind, and there are the proper checks and balances in place. So yeah, it's just a strange time we live in, Max. It's a strange time.
Yeah, I would agree. I think it's very interesting. I think that's well said. And yeah, in my mind, a big takeaway is just, yeah, the adversarial nature of this is just an interesting thing for us to reflect on. So, in the end, like I said, we and our clients, we want companies to be successful, and we want to help, where we can to make them successful. And if there are shortfalls, we will try to point those out in a constructive
Yeah.
manner. It's just so we, hope we continue to have more positive engagements
Yeah.
with companies. And so we can, yeah, kind of just be working together here. So it's always going to be
Fantastic.
differences of opinion and such, but I think trying to keep that focus on constructive dialogue, I think
Yeah.
suits us all.
That's great. That's great, Max. And I really look forward to seeing what work continues to come out of Segal Marco and the work that you're doing with so many great folks out there. You're definitely a very trusted voice in this market, in this space, and we could really use some guidance, I think, at this point in time. So thank you for your time. Thanks for tuning in. If you liked this, for our listeners, if you did enjoy today's episode, and if you like this content, there's plenty more to check out at diversiq.com. That is DIVERSIQ.com. We have blog articles, white papers, webinars on topics like this. And then if you join our newsletter at diversiq.com/newsletter, we'll send you all those things directly to you once a week. Okay. Thanks so much for your time, Max. Do you have any other sign off or final thoughts for us?
Just thank you, Dan. Thank you for, the work you do. Thank you for this dialogue today. It's fun. So yeah, I'll end on that note. Thanks again.
All right. Have a good weekend and enjoy the rest of your week.
Great. Take
Bye
care.
bye.